Is this thing on? It is on. Yeah. I literally woke up not more than 10 or 15 minutes ago. Figured I just might do this so that I can have the rest of my day to do everything else that I want to do. Let's start where we normally start. Um, what does this say? Government shutdown. So I think the government shutdown is over. The U.S. government shutdown, which is insane that the government was closed for so long, yet we could still continue trading and doing everything else that it was that we were doing. So far, it's looking like it's gonna be a hectic week schedule. I was expecting CPI and PPI last week, didn't come to happen. Kind of threw me off. And now we have NFP on the 20th for Thursday, which is also not regular or standard market conditions. But yeah, this is what we got. This is what we have to work with. The last week of November looks to be a bit more chilled. I don't know if that's actually gonna hold because these last few weeks, everything that they said they would do hasn't been done, or that was scheduled to happen hasn't happened. So let's just see how this week goes. Take it with a grain of salt, a pinch of salt. Yeah, pinch of salt, not a grain. Barely be able to taste the salt if it was a grain. Anyway, yeah, so biggest things that might happen this week is FOMC. For me, that's going to be 10 p.m. That's beyond my trading time, so it doesn't even matter. And here, NFP is going to be at 4:30. So maybe just skip the 4 o'clock hour and get back to the charts at like 5 or something. Friday, there's Euro news and then USD PMI at 5, so probably skip that hour and come back to trading at 6. Yeah, that's what they should told us to expect, or they're telling us to expect, or what's scheduled. I don't fucking know, dude. Just that's what Forex Factory says. Okay, JP225. Do we have? I'm still not sure if I should be using this one or this one because this is the higher high. You know what? It's too far for me for it to matter right now. This is the area and price that we're dealing with right now. We have the previous month's high, previous month's low. That's our range, and everything else outside of that at this moment isn't very relevant. So far, this month's been bearish. We haven't got to the midpoint of. Now we haven't got to the midpoint of the previous month's range, so not too much going on there. Weekly chart. This is the current all-time high, 273. Yeah, it's like 20 points. What we did have, if we zoom in a little bit. So this is where it gets a little bit tricky on what PD array you're supposed to use. I've decided to use this fair value gap, which broke this high over here, versus using this imbalance over here, because imbalances, they tend not to hold as good as a fair value gap does. What do we have? We have a swing high over here, we have a swing low over here. My guess is that we're gonna consolidate, and next week's probably gonna be within the range of up here to somewhere here. Maybe it might tap into this gap again, this PD array again. Why does that say imbalance? It might tap into this gap again, and then like consolidate somewhere here, but pretty much we're still within this range now. Yeah, I know we said the monthly range. Well, okay, so where's the monthly range? This would be, where's the low of October? The low of October is down here. The high of October is somewhere here. But within that range, we literally just tapped above it, and now we're here. Okay. This is for visualization. Okay, I did not visualize. So they did not. I don't know. Should I flip this thing around? Can I flip this thing around while it's here? Back on. Oh, no. There it is. There it is. Okay, no. Yeah, so you can see at the midpoint, we've closed below the 25 twice, so very good possibility that we could be coming down to the midpoint of this range, which is the previous month, which means that I would need this fair value gap at the moment, or rather, I would add this as a possible next level for us to trade into. Us for this pair to trade into. You guys don't trade with me. So you see here, we traded into the midpoint, but we rejected, so pull this a bit forward. See how next week reacts actually, and then from there we'll figure out if we're going to continue going lower into here, or we just might be heading higher for the all-time high. So at this point, drop to the daily chart just to be sure. Okay, so that was my anticipation for the last week, which I would say went pretty well up until Wednesday, and then Thursday and Friday I was just off, so give this away for now. And we see what goes on. The midpoint, we have this fair value gap here. Okay, so this should be an order block that I marked. Why? Because we retraced into fair value gap and then broke structure to the upside. Then it's like 102. I don't know. No feet concern me. Okay, now it's just so what do we have? We have okay, so I can't leave that there. Yeah, you can tell I just woke up. So last week what happened is we traded higher into this fair value gap, respected it, and then now pushed lower. Yeah. Although we didn't exactly gap through this level here. I'm gonna delete this soon. We didn't exactly gap through this level to the downside, but we did close this gap. So very good chance that we could have a retracement done into here before price pushes higher again. In that case, Can I do this? Let's see if I can. Can't do that. Can't. Maybe this screen's not bright enough. Okay. Why would it come back higher into here? I don't see a reason for us to continue higher. Tuesday we might have something like that. And Wednesday over here. Thursday, when we have the NFP announcement, we might have a dip into there. I'm gonna give Monday, Tuesday a little bit lower because we're probably gonna take this slow. This is so short side liquidity that we might take, and that's why I'm saying once we get to here after the bounce, Thursday, we might see Friday close somewhere out here. So pretty much a little bit of the opposite of last week. Screenshot. Don't need this there. Nope. Should not really. Not really, to be honest. So, buy side liquidity for me on the daily. Guess you could use this level as buy side. Although it's not my ideal buy side, even though this isn't my ideal sell side, but it's what we have to work with for now. So yeah, she is taking this and then coming back to this level, maybe pushing lower or then to make a new all-time high. Next level of sell side liquidity would be over here. Not into the screenshot. Right? Yeah, I guess this is what I have to do because there's nothing I can use from this look back, right? So this is my look back range essentially. This helps me to figure out where price could likely go to. Let's do something because it feels very intrusive right now to me. I'm using one color. Okay. Let's make it a little faint so that it doesn't overpower. I think that looks more screenshot worthy now. So I just took 3 screenshots of the same thing. Wow. Just might add another one. No, I'm not doing that. I'm not doing that right now. But that is JP225. One thing, let me say this about JP225. What I've noticed while trading this pair, it is not a very liquid pair to trade during London session. If anything, all indices, that's S&P. I don't know about the FTSE 100. I haven't traded that before or the DAX, but so far S&P, US 30, Nasdaq, and this JP 2 to 5 London session is just not it. We're probably gonna get caught in a consolidation or some kind of reversal or some kind of just not very easy trading conditions. Like it moves hella in the Asian session and the New York session. New York session, especially after 9 p.m., 9 a.m., around 9 a.m. That's when you see like the extrapolated one directional moves. But if you're trying to trade this thing in London, just find something else to do or like another pair to trade because it will frustrate you. That will make you emotional. You're gonna make decisions that probably you shouldn't be making. Yeah. So that's what I have to say about this pair. Wow, I spoke about this pair for 15 minutes. Insane. Anyway, that was probably 10, but yeah. Okay, let's go back. Let's start with the monthly and gold. Are we gonna do the same thing for gold? Yeah, I think I should because like this is far like much we're much further than the all-time high I was expecting. So I don't know honestly like where we're gonna go with this. Or what if I did this? All I do. Okay, I don't know why that song's playing in my head. Maybe because I heard it yesterday, but irrelevant. I think this would be PDRA to watch going into January. Where's the monthly? There we go. Because this is way too far. I don't think we're getting down to 2,500. Like, Jesus Christ, gold moves. 1,500. Almost 2,000. Almost 2,000. Almost $2,000 in a year. And we thought the 2024 bull run was a mega bull run. Okay, so I'm just fascinated by this pair because of how much it moves. See? Okay, you want to capture the entire range. Insane. Like, I honestly thought this was a bull run, mega bull run, 8,000 pips or whatever it was. Oh my god, it's never gonna happen again. We just doubled it. Anyway, why it fascinates me, I don't know, but it just does. Another thing also, yeah, I'll tell you that after finishing the analysis. Let me stick to one thing at a time. Okay, so this is the current all-time high. Monthly, which I would bet on. If you want, we can do the grading thing. Let's do it this way. What do we have? Let's focus on this area of price action. The way I was just like, no, this is too far. So we have traded through this entirely and not touched this level yet. As you can see, we had a rapid move to the upside that was quickly capped, and then we closed below the midpoint of this imbalance over here. which is not marked as an imbalance. Why is it not marked there? So what direction are we going in? Always closed below this midpoint for 1, 2, 3 weeks. My thinking is that we're gonna continue lower. Then again, this pair does whatever it wants, so that's still to be seen. Yeah, see, this is what I had anticipated for last week, that this overlapping levels, overlap of this weekly imbalance, and which technically was blown through on Monday. See, it even turned support on Tuesday and Wednesday before highs closing just below the midpoint onto Friday. So I'm just gonna leave this here. Probably not. Let me work with this first. Yeah, so my thinking was that this overlap would be a strong resistance point, I guess, and then price would just, start moving lower because maybe that's what is going to happen. No, that's not what happened. We do have here, it's price closed in on this fair value gap, so technically it's not really fair value gap I can trust. Yeah, so this one, let's move this out the way. So you've gone through this gap and closed above it. This is not the PD array, so I'm just going to take this. I will not have to draw a new one. Kind of. Like, one thing about ICT, like, why doesn't he just hold down the button? Like, sure, you don't want to put in the numbers. Why don't you just hold it down then, man? Jeez. Anyway. So this is a slightly confusing pair because I don't have a clear direction on where to go. See, we closed below this 75 level, retested, then closed below it again before breaking to the upside rapidly. And then here we formed the swing high, so we could see fair value gap, retracement here, push lower. Then also we have this high over here. So then that's a low, higher low. Mitigation block. Yeah. So we have a mitigation block over here. That's been respected. Yeah, it would actually, I think it looks a lot cleaner, more cleaner than that did. I'm gonna reduce the amount of junk on the charts. Don't worry. Or drawings. Yeah, you see, that's a lot cleaner. So you have now a mitigation block here, and you have this which traded up into here. So literally, price is at an equilibrium and could technically go in any direction. Well, it will go in one direction and not the other. I will use this as an order block then. She stopped just shy of. Okay, so we broke through the weekly level, closed above the midpoints on this daily level, failed to tap into that one, and then came back down and respected this. Grounds for bullishness, if you ask me, because yeah, we closed just below the midpoint, but for me it's the violation of this overlap that makes me be like, okay, good chance we're gonna be bullish next week. If not, we actually just could continue consolidating, have a structure something like this. This being the case, see, I would want to delete this, but then look here, where this actually got traded through and then it got respected. So it's like, do I or do I not? Anyway. That's gold. And then finally, Euro USD. I'm probably gonna stop trading this pair at the end of this year. I really dislike this pair. Why I still trade it? Margin requirements, to be honest, like more than anything. But I really dislike this pair. I I just dislike this pair, man. Anyway, so we have low the previous month's low. Oh right, I forgot. I was gonna tell you something about trading gold. I was gonna say something about trading gold. The rules of Forex, for the most part, do not apply to trading gold. Why? Because this pair is not a Forex pair. You know when they're like, don't trade Mondays? Well, you can trade gold on a Monday and it'll be perfectly fine. Don't trade Asia session because there's little liquidity. Gold has insane moves during Asian session, and that's perfectly fine. What else did I say? Oh, you need to have more size when you're trading gold, like more than 0.01. My guy, this pair, this is just Friday alone. That's like 200 pips. 200, it may be more. Because $1 is 1 pip, right? $1 is 10 pips. A change in $1 in this pair is equal to 10 pips in Euro USD, for example. So that means 32 to 33.17 is 10 pips. This is $179. So that's 170 pips in a day. Is it 170? Oh, let me just get my calculator, man. Like, I know it says 179, but like, I can't explain it. I need to learn this. Let's do 1.28. $1 is 10 pips. So this is 1,000 pips. This is about 1,800 pips in a day, right? This is gold. 1,800 pips in a day. On a bad day where this thing barely moved, that's 500 pips. It's a day it barely moved. Where's another day where it barely moved? Let's look at this one here. Again, 500 pips. Another day where it barely moved over here. 420 pips in a day. Like if Euro USD moved more than 100, like it takes a very, very volatile NFP or very strong announcement on NFP or FOMC or one of those big three to have Euro USD move like 120, 150 pips in a day. On a day when Euro USD moves 200 pips, everybody is like, oh my gosh, what a day. This MacGyver, okay, I don't even know where I picked up that word, but this pair can move 900. Like it hasn't been strange for this year to see gold move almost 3,000 pips in a single day. Okay? You're telling me that I shouldn't trade this pair on a Monday because I'm trying to get 100 pips, 200 pips. I shouldn't trade this pair on a Monday. I shouldn't trade this pair during Asian session, during London session. You're fucking mad. Like, those forex rules of yours just do not apply to this pair. I am sorry. Like, you can say whatever the fuck it is. Actually, I'm not sorry. Yeah, I'm not sorry. But yeah, say whatever the fuck you want. But this pair does not behave like your forex pairs. It does not behave like crypto. It does not behave. There is nothing like it. Why? Because gold is a precious rare earth metal, and guess what? Its value is going to be reflected into the charts. Why it fluctuates this much? Honestly, I don't know. I just know that it does. It can give me 100 to 200 pips. On 0.01, 200 pips means you're making $20. So you could potentially make $50, $60, $100 off of 0.01. Try fucking doing that on your forex pairs. Like, I don't give a shit if it's Euro GBP or Audi Chef or whatever it is. None of them behave anywhere near the way that this pair does. So, to tell me that I should just apply the rules of indices, the rules of forex to this thing is mad. Indices barely move in Asia and London, especially the American indices. Barely move during Asia and London, and yeah, YM might have like a pretty big move during the New York Open. Nasdaq every now and then, maybe S&P. Like S&P itself is like super fucking slow, but yeah, you might have these super directional moves during the New York session, but gold could do 100 pips, 200 pips in all three sessions. What do you mean that I should not trade this pair at this specific point of time and day? Like, what if I'm just like 20 pips is a freaking stop loss? Like in EU, if you had a 20 pip stop loss, that's a lot. But in gold, Jesus Christ, like they'd wipe you out in seconds. Anyway, went on a little rant about gold because somebody's like, oh no, gold is just like any other forex pair. Shut the fuck up. Okay, what was I? Euro USD. Swept the previous month's low, and now we look like we are on the run higher. Is there any PD array I can visibly see? There is a rejection block, what would be considered a rejection block over here, but I don't know how to trade those. Let's just look at the previous month's range. See, this is where it starts getting a little confusing. A lot of lines. Not really a lot of lines, it's just all this is congested within a small space. So what happened last week, well, before last week, was we pushed lower into this rejection block. Just mitigation. It's mitigation. Yeah, it's mitigation. So we came down lower into this mitigation block, and then previous week saw us push higher into whatever this consolidation junk is, which is also the midpoint of the previous month's range. Am I gonna add anything else to it? I don't think I need to. Honestly, I don't think I need to. Because don't even have a swing high. Like the closest swing high is over here. Just have a swing low here, so expecting next week to be also bullish, then come back and then push higher. Because, yeah, otherwise, yeah, I was completely off. I'll admit it was off. Expected us to retest this fair value gap, but then it acted as a breakaway gap. Dude, I don't fucking know. There's too many fucking concepts, but yeah, we didn't drop back into this fair value gap and then push higher, but we did push higher, so could have got a trade from there. Let's put this to the side. This is, to me, no longer relevant. And technically, should be this because that closed below. See there? But we also closed below here above this, so she's the one that's still fairly unused. Where do I see us going next week? Now we have this fair value gap. Why was I doing that for so long? I don't know. So something like this. Something like this, maybe. Yeah, but I don't expect too much from this pair, so. Yeah, that's what I expect from the week ahead. Anyway, back to real life.